Hello, this is Alex Perini from Samuel Financial Services, just with a quick update in relation to the federal budget that was released earlier in the week. Now, this was a more lackluster budget than we've seen in recent years. However, we just wanted to cover off on a few of the more relevant changes relating to clients. The government has announced that it will extend the personal income tax cuts that were announced in last year's federal budget. We're not going to get into too much detail in this video, as it's certainly been one of the more heavily publicised changes, but essentially from 1 July 2018 to 30 June 2022, the government has promised to increase the low and middle income tax offset from a maximum of $530 to $1,080. So taxpayers with an income between $48,000 and $90,000 will be eligible to receive the maximum offset, and that offset phases out with incomes up to $126,000. From 1 July 2024, as per the government's already legislated plan, the government will reduce the 32.5% tax rate to 30% and abolish the 37% tax rate. Moving on now to superannuation. From 1 July 2020, the government has proposed to allow voluntary superannuation contributions, so both concessional and non-concessional, to be made by those under age 67 without the need to have already satisfied a work test. So essentially being able to contribute whether working or not. Those aged under 67 will also be able to make up to 3 years worth of non-concessional contributions under the 3-year bring forward rule. So when we look at this change in combination with the home downsizing contribution rules, a couple aged 65 and 66 that have downsized their home have the potential to add up to $1.2 million to their superannuation based on certain eligibility criteria, representing $300,000 each under the home downsizing contribution rules and $300,000 each under the 3-year bring forward rule. The government has also announced an increase for the age limit for spouse superannuation contributions from age 69 to 74 from 1 July 2020. So if your spouse earns below $37,000, you may be able to claim the maximum tax offset of $540 when contributing $3,000 to your spouse's superannuation up to that age limit. The government has also announced measures to reduce costs and simplify reporting for superannuation funds, which more specifically relates to those with self-managed super funds with interest both in accumulation and retirement pension phases. These are more technical changes in nature, so we won't go into detail in this video, but we'll certainly discuss with relevant clients at their planning meetings. Important to remember that these budget announcements are still only proposals at this stage, and each of the proposals must be passed by Parliament before being legislated. And we'll certainly be discussing these changes if relevant to you at your planning meeting. But in the meantime, if you have any questions or concerns, please don't hesitate to contact us. On one final note, given many of you will be finalising your tax returns at this time of the year, you may have been contacted by the tax office regarding Division 293 tax. Essentially, this is an additional 15% tax on superannuation concessional contributions for those earning above $250,000. You do have the option to pay that tax from superannuation or from cash flow, so certainly please notify us upon receiving that notification from the tax office, and we'll provide an assessment as to the best funding approach along with helping with any paperwork required. If you have any queries, please don't hesitate to contact us, and we hope you enjoy your weekend. Thank you.